Bitcoin, what is it doing? Are we at the beginning of the bear market or is there still room for a lot of upside potential? So we're going to do something special today. We're going to do a macro picture. I call it the Michael Saylor viewpoint of Bitcoin. The macro, like we're going to look at the real, looking at really the data from 2017 to now. What's the macro psychology of the markets as it's expanding or is it contracting? Then we're going to go into the intermediate side. So like more kind of recent data, what we can see what's going to likely happen in the next few weeks and months. And then we're going to go into the micro and then the sub micro. And that's going to give you a really strong opinion of where I believe Bitcoin is right now and what we should anticipate based on high probability in the very near future. Today's going to be a longer video, so I've put into the timestamps. We've broken it down, so if you want to watch the whole thing, which I recommend, because I'm going to really just get my thinking across to you on how I'm viewing the market right now, which is really, really important, especially if your portfolio is down 20%, 50%, if you've not been trading, but you've just been buying the underlying token, which is probably likely. Bitcoin, its movement, it's going to almost dictate what the rest of the market is going to do. It is Big Brother. It is the category king in terms of storage of value, in terms of it's the digital gold, but it's more than that. It's the brand of crypto. And when Bitcoin has optimism behind it, it brings optimism, which is buying to the rest of the market. So it's going to be really, really important today that we pay attention. But again, it's going to be in the timestamps also. And by the way, if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been trading the currency markets for around 15 years, but I bring that knowledge and wisdom to crypto because I love crypto, especially since 2017. And I was featured in this best-selling book, High Probability Trading Strategies, back in 2008. So if you like today's content, like, subscribe, hit the bell notification. Help me get to 1,000 subscribers. Share this content. I'm going to give you everything today, everything and more. I think I'm on 444 as of this morning. So it'd be great if we can get to 1,000 because YouTube actually gives me some extra perks. Then I can give you more quality content again. Maybe we even do some live streams in the near future. So let's dive in to Bitcoin. So what I've done is I've deleted all my previous data on the chart. We're going to do a fresh blank canvas. We're just going to look at the chart and initially starting on a macro. So we're clear on the time frame. This is the daily time frame. Let me just make a note on this. Here is 2017. Let's just write some dates here so we're really, really clear. Sometimes it can be a bit confusing. Let's just look at this date here. We are December 2018. Let's just call it 20. Let's go. Let me write it like this actually. Let's go December 2017. That's this kind of high over here. That's where the market was. Down here is December 2018. So it's like a year down the line. Because I'm going to be talking about this, but sometimes it's hard to see the context on the time frame. So we're looking at the macro picture first of all. Right, and then obviously we've got our recent low over here. Not that recent, but recent was we had March 2020. We had our last Bitcoin halving event. And then last but not least, we'll just do a date up here. This high was April 2021. Right, so we have a really clear picture of the time frame. So sometimes I know it can be quite confusing if you're not used to looking at charts. But we're looking at a line graph closing data on Bitcoin. And here's the dates. Here's some key dates of this high, this low, and this high. Right, so we've got a macro picture. But what we're going to look at is initially Elliott Wave pattern, because that will tell us the psychology of the market on a macro picture first of all. So what do we see clearly, right? What do we see clearly, or what do I see clearly? Well, on a macro picture, we see a nice move to the upside. This was that 2017 bull run, or the leading up and the end of the 2017 bull run. Then we saw a big correction. It was a big correction. It was like 85%, 84, 85%. And then we've had what looks like this next amazing move up to the upside. So on a macro picture, what I'm seeing right now is, if you haven't seen my Elliott Wave crypto free trading masterclass, I cover Elliott Wave theory as one of the 3 secrets. So I highly recommend it. It's in the description below, and we just cover what Elliott Wave theory is, the importance of it, and how the psychology of the market, it's always contracting and expanding based on mass psychology, and that's what we're measuring right now. We're measuring mass psychology. So if we now just make a couple of labels so we're really clear on the opinion of the market. So we have an opinion of the market, but it's not a fixed opinion, because sometimes the market gives us more information, as it has done recently. We have to reevaluate. Like we're a doctor and we've given medication because we think this is the pain point, but we get the feedback. If it's cured the disease or whatever it is, great, it worked. If it doesn't quite pan out as we planned, we have to reevaluate and go, oh, maybe it wasn't that. Now let's just look again. And that's what we do with Elliott Wave counts. So let's just do this on a macro. Right, so we've got a nice wave 1. I'm counting this as a wave 1. Counting this, if I can grab it, as a wave 2, macro wave 2. Right, it's a bigger picture. This is Michael Saylor level analysis, grand picture. Right, we're not worried about the small time noise right now when we look at the macro picture. Then we've had this amazing move up since December 2018 all the way up until April 2021. This amazing move up, and we're just going to focus on the macro. Right, so let's just get rid of, I'm just going to move this arrow here. So what is the macro? Well, after a wave 2 comes a wave 3. Right, so potentially we could have a macro wave 3. And why are we more confident with this now being a wave 3? It's because we have this amazing deep pullback, which we're going to go into. So what part of the market are we in right now on a macro degree? Well, after a wave 3 is a wave 4. So on a macro, we are on a wave 4, but not on a completion of a wave 4. So right now, we are looking at the market as, even on a macro, we're in a bearish section of the market, because wave 4 is a corrective part, the same way a wave 2 is a corrective part. And corrections are really, really important for the markets. It's healthy, right? So now we're going right on a macro scale. It's on a wave 4. Where that wave 4 is going to end, that's what we're going to look at when we go into the intermediate. But right now we go, right, it's a wave 1, 2, 3 on a macro. And now we've had a pullback on a wave 4. And we want to look at where's the high probability end of a wave 4. So we are on a wave 4, right? We're on a wave 4, but we're going to put a question mark, because we don't know where that's ending. We're not saying this is the end of a wave 4. And when we go into the intermediate count, and then the micro count, we're going to see why this is unlikely to be the wave 4 end. It's going to be probably down here somewhere. Right, so now we've got a macro picture. Let's make some notes on this chart, right? Because I want to get this really clear to you. Because I know it's a sensitive time, right? It's like if your portfolios come down 20%, 30%, 70%, 60%, 50%, maybe even 80%, because this is panic selling right now. Panic selling. And when Bitcoin goes lower, it installs fear into the market, regardless of how strong the fundamentals are, because short term the markets are a voting machine, right? A voting machine based on fear and greed, and votes are placed with buying and selling, right? When the fear is instilled, it's pessimism. People sell off because they're panicked and they're like, I don't want to lose money, I've lost money already, or people are taking profits. So it's the two combined together which really draws down the price, and that's going to affect the whole market. So let's make some notes. So we're saying the macro. Where are we right now on the macro? We've got a one, 2, 3. So we're on the wave 4. So the macro, we're going to say we're on a wave 4, macro. And then we're going to look at the intermediate. Hopefully I spelled that right. I used to be a math teacher, not an English teacher. So the spelling weren't my forte. It was mathematics, always mathematics, intermediate. So if I spell it wrong, forgive me. So we've got just 1, 2, 3, 4. So now let's go into the intermediate wave count, right? We're going to focus on, what do I mean by intermediate, right? Well, if you've watched my crypto trading free masterclass, you'll see Elliott waves, and I talk about Elliott waves unfold typically into 1, 2, 3, 4, 5. But wave 1 has sub-degrees, like lesser degree waves, and that's what we're going to look at now. Wave 3 also have lesser degree waves, and so does wave 4. All the waves have lesser degree waves. So what we're going to do is we're going to now zoom in more on a narrow time frame on what's the psychology of the wave within the waves, and that's what we want to look at. So let's do two things to get the concept across to you. Let's just get rid of these. Let's keep these notes over here. So we know macro, we're saying we're on a wave 4. What's the intermediate wave count, right? Intermediate. Well, let's keep it on the daily chart, on the closing data. Let's just zoom in a bit more, and let's just focus now a bit more on this part of the market, right? I know the wave 4 now is off the screen. That's fine. Let's just move this up. Let's move this up. So what we're going to initially look at is, let me just draw it again. We're going to look at this part here, this macro wave 3. Does it break down into lesser degrees? So let's just now go to one lesser degree on an intermediate count. What do I mean by that? Well, typically a wave 3 breaks down into 5 waves. And now looking at how the market is right now, what seems to be really, really clear is that if we take this as the beginning of the wave 3, because it's the end of the wave 2, and I'm going to put this magnet on here, and we go, this looks like a clean 1. We've had this, COVID correction, this COVID bar down here, this wave 2. Then we had this nice move to the upside. This actually ended up being a 2.618 Fibonacci extension of wave 1. So that's a nice, looks like a nice wave 3 of a wave 3. Then we had this correction, which looks like a wave 4 of a wave 3. We can get that low. And then we had this nice 1, 2, 3, 4, 5. Elliott Wave terms is called a sideways diagonal, wave 5 count. You've heard of Wyckoff. He also was in the 1800s, 1900s, old school guy, one of the forefathers of technical analysis, did a lot of heavy research, and that coincides with Elliott Wave and Rouse, Nelson, and Elliott, how they do the psychology of the markets. So this was actually a nice 1, 2, 3, 4, 5. So 5 of a wave 3. So let's just change this to an intermediate so it's a bit bigger. Let's just change the color as well so it's nice and clean and clear. So now we've got this intermediate wave count, right? If I just zoom in, hopefully this is clear to you what I'm seeing, what we're talking about here. We're talking about, we've got this nice wave 3. I'm taking my time deliberately explaining this to you because it's important. Because Bitcoin is such an important cryptocurrency. It's the brand, it's the beginner, it gives the whole world confidence or non-confidence, lack of confidence in the whole market. So now we've got this, and let me just turn this off. Wave 1 of a 3, wave 2 of a 3, a wave 3 of a 3, a wave 4 of a 3, and a wave 5 of a 3, right? That's the intermediate count, right? And now, why is that important? Because now we're going to go into the more recent data in terms of, let's just now zoom in to the intermediate count of here and now. So we said, we're on this wave 4 on a macro level. Let me just bring these notes across. Let's just bring it over here. Macro is a wave 4. Now, what's the intermediate wave count for the wave 4? So we're saying there's a grand wave 4 unfolding right now. But if we zoom in, what typically does a wave 4 do in terms of wave structure? Well, any correction typically has a minimum of 3 waves, right? And they're corrective waves, which mean they're overlapping. Now, this first wave that we had down is very impulsive. Very impulsive. Look at that, the size of that movement. We went from 58,000 down to the initial 34,000. That's like nearly 50% retracement. That's a big impulsive move to the downside. So this doesn't look like a corrective move. It looks impulsive. So in an impulsive move is typically a wave A. So a wave A, if I just bring this up, of a wave 4, a wave A of a wave 4. Did you get what do you mean by that? Well, let's just make it a bit clearer. Well, typically what tends to happen is, oh, not this one. We're going to go for this one so I can draw it for you. When you have a wave 4 correction, you typically get a first move down, which is impulsive in the correction. And it's typically a wave A. And then you have a move to the upside, which is a wave B of a wave 4. And then you have a third leg down, which is normally the completion of the correction, which is a wave C of a wave 4. And if I just double click on here, we can add these waves so we can enjoy it. So we're anticipating the wave 4 would look like this. So on an intermediate count, it looks like we're actually on the wave A of a wave 4 and coming towards the end of a wave A of a wave 4, right? Hopefully that's making sense. So now when we make our notes, we can write, we're on a wave A. I'm going to write, normally I would write it like this, wave A colon 4, and that just means a wave A of a wave 4. But for simplicity's sake, let's just write wave A intermediate. Let's just write wave A of a wave 4. And then macro, let's just make sure it's clear. It's wave 4. Right, so now we've got 2 degrees of counts, right? I'm just going to make this smaller so it fits on the screen. Right, we've got 2 degrees of counts. We've got the macro is a wave 4, and now it looks like we're coming towards an end of a wave A of a wave 4. And as we're looking at it right now, with the new data and information and the closing price of yesterday, it's showing us that it's likely coming close to an end of a wave A of a wave 4. So now what we're going to do is we're going to introduce 1 or maybe even 2 more counts, degrees of counts, because then we can really get narrow in our viewpoint. So now it's not the Michael Saylor part of the strategy in terms of Michael Saylor looking at the 10-year, 20-year picture, 100-year picture of Bitcoin, right? But we're looking at more now the weeks and months ahead of us, right? The weeks and months. We want to look at the next 3 to 6 months because that's going to dictate a lot for us in terms of how the market's. So now we're going to look at the micro, right? So we've got the macro picture. We've got the intermediate, which is a wave A of a wave 4. Now we look at the micro. So what do I mean by micro? Well, now we want to zoom in a bit more. We want to zoom into this area of this wave A. Does this wave A in itself, I'm just going to get rid of this wave just for the clarity. Does this wave A break down into any clear pattern that gives us valuable information? I'm looking at it going, oh, wow, this is now looking like a textbook. 1, 2, 3, 4, 5. Right, 1, 2, 3, 4, 5 on a downward trend, and a wave A typically breaks down into 5 waves. So what are we seeing in front of us right now? The psychology of the market. What are we seeing right now? Right, this is the tough part, right? If you're heavily invested into crypto, especially into altcoins, and you're taking a drawdown, it's hard to look at the facts because we have a biased opinion, right? It's called cognitive dissonance. We want to just go, Bitcoin is still going to go up. The fundamentals are strong. You know, Michael Saylor just bought X amount of Bitcoin again. El Salvador's made it legal tender. It's going to have to go up at some point. But we just want to look at the facts. What's the psychology? Because ultimately, buying and selling determines short-term price. And short-term means weeks and months, right? Weeks and months and even 1 or 2 years. Short-term buying and selling. And then long-term, the weight of the value of the cryptocurrency in this case, or any market, it shows in the price, right? So we want to look at what's the psychology of the market right now. Well, it looks like a really clean 1. Oh, let me just make sure I click in the right place. Click here first. Get this magnet on. Looks like a really clean 1, 2. Now, if we look at this, it's like it's come down really nicely. Now, we can kind of argue, is this the wave 3 end, or the wave 3 end? Well, now that we've got this new information, it actually looks like this low is either we can say this is the wave 3 and this is a complex correction for a wave A, or we can say this is the wave 3 low and we've had a nice A, B, C of a wave 4, and now we've got this final leg of a wave 5. So this is new information. We didn't have this a few days ago, so we want to take the most recent information to make our judgment. So we have a really strong opinion of the market, but we're not forecasting for the sake of forecasting. We just want to know what's likely to occur next. So now let's just change this to a micro wave count. And this is an intermediate wave count. This is intermediate, right? I don't want to go intermediate, but yeah. So now we've got this next degree of a wave count. What looks like a wave 1, 2, 3, 4, and then a 5 of an A of a wave 4, right? So we are able to now get really detailed. So if we bring up those notes, I think I've got it up here somewhere. If I bring up these notes down here. So now, let me just do this so it's really, really clear. I like to have notes on my chart because if we're doing a detailed analysis like this, we don't do the analysis over and over again. We just have a strong opinion of the market and then invest and trade based on that opinion. And if the market gives us more information that says, no, the wave count is wrong, then we need to readdress, reevaluate, and make a business decision that's based on logic, is based on objective information, and then act in a non-emotional fashion, which is easier said than done, right? It's easier said than done, and I know you're experiencing that right now. So micro, looks like we're on a wave 5 of, I'm going to write it like this time, a wave A of a wave 4. Yeah, hopefully that makes sense. On the macro picture is we're on this, what looks like a wave 4, but wave 4 typically is an A, B, C, so we're just on that initial A, and then of that A, that typically breaks down to 1, 2, 3, 4, 5, and we seem to be on that 5 part of that wave A. This is really valuable information, because now when we do Fibonacci price, which is what I'm going to do next, in terms of a cluster, we're looking for what's the high probability end of this wave A, and then what should we anticipate next. Because even if the market does a wave B and doesn't make all-time new highs, that wave B is actually going to add a lot of optimism to the whole market. And that's going to be very valuable for us, because a lot of people are asking me now, is now a great time to buy crypto because they're seriously undervalued? And then I can ride the waves and get the 100x's, 50x's, 20x's, 1000x's, whatever it is. And ultimately, only you can make that decision, and you want to have it in your trade plan or your business plan with your investment, knowing that drawdowns are a natural part of investing and trading. And if you're trading, you're going to have stop losses. If you're just investing and just buying it with a hold strategy, which is also a good strategy, is knowing that you may take 30%, 50%, 70% drawdowns before the market recovers. But this is going to give us valuable information on when that's likely to occur. So let's now dive in on Fibonacci price. So now we've got a really clear opinion of the market. Let's just zoom back out. Zoom back out. We went from a blank canvas to now saying, right, it looks like we are on 3 degrees of counts. If this is clear. Let me now just get rid of these dates because they're adding a bit of unnecessary noise to the chart. We're saying, right, the macro count is where right now on the macro, we're on a wave, what looks like to be a wave 4, right? So that's this part here. This part here, right? And of that wave 4, typically that breaks down into 3 waves, which is an A, B, C. And we seem to be on what looks like here, what we're saying is a wave A of the wave 4. What do we mean by that? Well, this initial move to the downside here is what we're counting as a wave A of a wave 4. And of this wave 4, we are going to anticipate at least 3 legs. One more leg to the upside, and then whether we like it or not, normally corrections happen in 3 legs. So we should anticipate one more, and then afterwards we're going to anticipate a wave 5, which will then be potentially that all-time new high. So we want to take that into consideration when we're looking at this in an objective, non-emotional, non-biased fashion, which is tough, right? It's tough. And then what we're saying is, of this wave A, when we zoom in, if I grab this notes and put it over here, if I zoom in, the wave A typically breaks down into 5 waves. And of those 5 waves, what part are we on? So here we have this wave 1. Here we have this wave 2. Here we have what looks like a wave 3. Here we have what looks like a wave 4. Now that we've made a new low, and we seem to be on this wave 5. And that's why we've labeled the micro count as a wave 5 of a wave A of a wave 4. So now we've got 3 degrees of Elliott wave counts, which allows us to get really, really narrow. So what we then do next is we want to use the golden mean. 1.618 is a Fibonacci ratio that shows up in nature. And what Ralph Nelson Elliott in the 1800s and the mid 1900s discovered is that it also applies to markets, stock markets, commodity markets, the forex markets, and now crypto. Since Bitcoin's been alive since 2009, January 2009, when the first Bitcoin was mined, and when it got a bit more mature and the price data became available, it became apparent that the psychology of the market, because there's a lot of masses, like global participants, and when it's global participants in a infant market, the psychology really applies really, really well when it comes to Elliott Wave and Fibonacci. So there's different ratios of the 1.618, and one of my mentors, Robert Miner, actually, the book that was featured in High Probability Trading Strategies, he's one of my mentors, and he's brilliant, absolutely brilliant, because he's been doing Fibonacci Elliott Wave since the 1980s, right? 1980s. And he figured out the key ratios based on Ralph Nelson Elliott's work, based on W.D. Gann's work, based on even Wyckoff's work, really researching all of that. And there's a pattern. The markets are always contracting and expanding in a dynamic fashion, meaning that there's a relationship. Wave 1 has a relationship to wave 2 that has a relationship to wave 3 and 4, and each one has a different kind of relationship. And we can now know those relationships. You don't need to know them today, but I'm going to do price projections. I'm not going to go into the detail of the relationships. I'm just going to project the high probability price clusters that tell us when are we likely to see the end of a wave A of the wave 4, so then we can anticipate the wave B of the wave 4 and what that normally looks like. So you ready? You ready? And by the way, if you love this content, this is like next level, by the way. I'm giving you like a masterclass here. But it's important. It's important because I know it's a scary time, especially if you're new to the space and you've taken that drawdown, or even if you're a veteran and you've been investing for if you've been in the space for like over 3-4 years, even over 2 years, you're a veteran in the space. And still, it's not comfortable taking a drawdown. And if you're not familiar with the psychology of the markets, it's never comfortable taking a 50%, 20%, 30% drawdown. So now let's look at this. So like, subscribe, hit the bell notification, but please share this content. People need to know the opinion of the market. It doesn't mean it's going to unfold perfectly the way we're saying it. It's just that it's high probability that this is going to happen, right? It's going to be high probability because this is what we did before. We projected this high over here and we did get the correction. And then as we got more information, I had to change my slight opinion of the market, say actually it looks a bit different than what we're anticipating and we can act objectively. So help me get to 1,000 subscribers. If you're liking today's content, share it. Please share it because I think we're on 444. Just currently today is June 22nd. So I've got 8 days to get to 1,000 subscribers. It'll mean the world to me if you can help me out. So now let's do Fibonacci, right? So let's just go back to the macro, right? There's a few things we want to take into account, right? So we're looking at, no, sorry, let's ignore the wave 4 because normally what I'll do is I'll look at when's likely for the wave 4. But rather than getting into that, we want to know really next few weeks and months, right? Weeks and months is where I know where you want the information, right? You get great. We know the 10-year picture, the 5-year picture, 3-year picture, great. But how do I make money in the next month, 2 months, 3 months? Right now, like what's going to happen right now? Should I be, like a lot of you are asking me, should I sell off my Kusama position? It's gone from $400 to $200. Should I sell it off right now? And only you can make that decision. But based on what you're going to see right now, the reason I'm doing this in such detail is Bitcoin is the category king. Like category meaning two things. One, the storage of value, right? Storage of value is the new digital gold. So definitely category king. But it's like the king and the brand of crypto. And when the confidence, it's like the brand to the outside world and it brings in retail investors. It gives confidence to institutional investors and everything else. And when Bitcoin does well, altcoins do incredibly well. So it's almost like Kusama is going to be magnified by the Bitcoin price to a certain degree. Even though it has its own emotions and its own personality, Bitcoin is like an indicator for the whole market. So that's what we want to look at. So what we're going to just focus on is actually this micro part, the wave 5 of a wave A of a wave 4. When can we anticipate the end of a wave A, and then what should occur next if we do get that? Yeah, so you happy with that? Great. So let's jump in. So let's go straight to this part here. I'm going to keep the notes. I want to keep the notes here. So it's valuable. Because sometimes when I'm talking about lesser degrees. Sometimes it can get confusing. I know. It's like Jigay just said a wave 4. Instead of wave 5 of a wave 4 of a wave A, or a wave 5 of an A over 4. It's like, Jesus Christ, slow down. So I'm putting these notes here to kind of make it easier to kind of keep with what I'm going on about. But we're still looking at a grander picture. We're looking at the daily chart still. So what we want to look at is what is the typical likelihood of the end of this wave A. So what we're going to do is two things. Because we might even go to a sub-micro account, which means does this wave 4 here, this wave 4 to wave 5 here, break down into a lesser degree. But initially, let's just focus, on this 1, 2, 3, 4, 5, and the end of this wave 5 price projections. So let's just do it. I just want to zoom in so make it as clear as I can. Let me put it over here. Well, let's see in this. Right, so that should be clear enough. All right, so what's the typical price projections for an end of a wave 5? Just a generic end of a wave 5. Doesn't matter that it's a wave A of a wave 5 or wave 5 of a wave A, just the end of a wave 5. Well, typically, there's an important ratio, right? And it's going to be, first we're going to measure the beginning of wave 1, which is the top of this wave 3, because we're going to the downside, downward 5-wave count. And we're going to measure the whole price action until the end of what we're calling the wave 3. And then we're going to project it forward from a wave 4. Now the typical two price projections is 62% and 100%. You go, wow, did you get that? 62% looks kind of low. It's like way down here, like it's 21,000. I go, look, we're just going to do it firstly in a really objective manner. They're going to move our emotions aside and go, look, this is what we need to anticipate and be ready for, because these are the typical ratios. If this is a wave 3 down here and not here, and a wave 4, and it is an ABC, it's likely. Because just so we know, I haven't done this retracement, but just have a look. A wave 4 typically is 38.2% retracement of a wave 3, and 23% is normally, because normally wave 4s reach a minimum of 38.2%, and you can see it hasn't quite reached that. And the other ratio that's quite important is wave 1 to wave 3, that it reaches 23%, and you can see that is in that zone. In this zone is a wave 4, so we can be confident that this is actually the wave 4 and this is the wave 3, and there's a clean ABC structure, and this would be more of a 1, 2, 3, 4, 5 sideways, which has different kind of psychology to the market. We don't go into that today. So we're just looking at this now, saying this looks like a wave 4, and what's typical of a wave 4 afterwards is a wave 5. So these are one of the price projections. Look, it's not the information that I want either, right? I'm just the messenger. I'm just going, look, let's just look at it objectively and prepare ourselves, because it's much better to anticipate what's going to happen rather than just react to what's happening. And that's the difference between the pros and the amateurs. People are emotionally reacting to the market as opposed to anticipating. So we need to be clear that anything can happen in the market and what's highly probable. So this is one of the projections, but it's not the only projection. So there's two other key projections that we need to make. And then we will probably go to a sub-micro because it's going to give us valuable information. The other one is going to be an external retracement. In fact, before we do the external retracement, there's one that's more powerful and more important, which is wave 1 and wave 5 have a direct relationship. And typically, a wave 5 is most common 100% of wave 1, as in they're almost like twins. Whatever wave 1 does, wave 5 does, especially if wave 3 is the extended wave. In this case, it is. You can see it's the most impulsive wave compared to wave 1. So the most common high probability is 100%, right? Which is, the price here is, what is that? 26,000, right? 26,000. 26,000 you get. That's low. I go, look, I'm just the messenger, people. I'm not saying that's what I want. I'm just saying that's what's highly probable, right? And then we're going to do what's called an external retracement. An external retracement is more of a confirming Fibonacci ratio, which shows the relationship. And it's taking this wave 3 low to this wave 4 high, what we're seeing as a wave 4 high, and doing a 1.618 external retracement and a 1.27. So you can see that it's getting more narrow up here. So even down here, it's kind of going, okay, this is the maximum, but it's in this zone over here. And by the way, with this wave 100% of wave 1, the minimum is 62%, right? And we want to take that into account, right? Because we got this zone, because just because these numbers are here doesn't mean it's going to hit. We're going to go, right, we've got this wide cluster of zones over here. The most important numbers, the ones that hold the most weight, are going to be the ones in bold. Let's make them even bolder, right? This 100%, let's make it extra bold, right? These two are really, really important. And so are these two. Whoops. And so are these two. Boom, boom. Right, and this one's more of a confirming indicator. So we've got this cluster, but it's really wide. Look, the important one, it goes as high as 31,500. I know what you're saying that doesn't sound too bad because that's kind of close to the price action. So that's the minimum that we should expect. And the absolute maximum we should expect for this wave 5 is all the way down here, which is, am I reading that right? Jesus Christ. That's like, that even says the 10,000. Okay, that's like a real outlier. Right, which one was this? This was the, wave 3 to this. 62% is most common. Especially, actually there's two ratios. There's 38.2% is the minimum, especially when wave 3 is very extended, and then 62%, and then 100%, which is right down here, I'm going to call that an outlier because it's so far from the other indicators. That's going to be highly unlikely. It's more going to be the 38.2 to the 62%, which are, let's just make it, let's just do, I'm just going to make these two like this, just so they stand apart from the others. So now we have this cluster here, and we have this cluster down here. Right, so this gives us valuable information, guys. So this is literally saying the minimum we should anticipate, like we just said, is this one, this relationship to wave 1, which is 62%, and the absolute maximum, which is a strong maximum, is 21,000. So now what we can do is we've got a nice strong opinion of the market. On a pattern perspective, we're saying it looks like a wave 5 of an 8 over 4, and the end, the typical price zone of an end, we might be at or near the end, or we might have some downward movement still to go, and we want to be objective about it, but we haven't got enough information to say what's likely. So now what we want to do is we can look at time and we look at momentum, but we can also look at one lesser degree of a count, and that's what I want to do. Now on the daily chart, the lesser degree is just not clear. Like there's not a breakdown of a wave on this part of the move here. Like it's just not clear, right? And we don't want to try and do a wave count when there's nothing clear, because it's too high a degree. We're on a daily chart. We might need to jump into a 4-hour chart where one bar represents 4 hours to see, is there a clear pattern on the downside here? So let's do that next first. So let's just jump in to a 4-hour chart, and then we can look at some momentum and some pattern and price. Time and price. We've got done price already. So let's jump into this 4-hour chart. Let's get rid of this. We will keep it on. Let's just zoom out for a second. Let's just make sure we got the right context. So this is what we said was the wave 4, and we're looking at this movement down. Let's go to a line chart again. It might just be a bit cleaner for us to see that there's this wave 3 low. Let's just zoom in, calling this a wave 3. We had this nice ABC, what looks like a nice ABC of a wave 4. And now we've had this move to the downside, right? Move to the downside. We've still got all of our projections from the larger degree count, from the intermediate count that we just did, all these projections. But we want to see, does this actually break down into a clearer pattern for us to see? And sometimes it's clearer to see on a candlestick pattern. Let's just have a quick glance. And other times it's clearer to see on a line chart. Both with pros and cons. But we can do this count and saying, look, it looks like a 1, it looks like a 2, then it's kind of made another move down as a 3, 4, and it could be making a wave 5 over 5. Is it really, really clear? It's kind of clear, but not that clear. But what I would like to do is actually, let's look at the momentum next, right? Because the momentum can give us really valuable information to see if Bitcoin is close or at an end of a particular wave A. So let's actually just dive back into a weekly chart, right? Weekly chart. It's got the same information that we've drawn. And just so you know, TradingView is great because what you can do, just so you know, on this daily chart in the top right hand corner, you can double click and you can go to visibility and you can say, I want these lines, these price projections to also show on the weekly chart, right? So if I look at a weekly time frame, it will show, or I don't want them to show. So if I keep that as shown, now those price projections are shown on the weekly as well. But what I want to do in the weekly, we'll keep it to a line chart, but we're not focused on the price action. We want to focus on the indicators, right? Let's even do this. Let's make them a bit bigger. So we want to get focused on the indicators. So we look 2 indicators, right? 2 indicators. And what's the difference? The only difference between the 2 is the settings, right? This one we're using Fibonacci numbers 8533 of stochastics RSI, and this one we're using a slower moving average, and it's 13855. How important is that? Well, what we want to do, what's the purpose of an indicator? Well, the indicator's job is to indicate, right? It gives us an indication of where the market's at. So when we look at the price action, these lows, let's just, I want to make this really clear, extra clear today. I'm taking my time deliberately. And again, everything's in the timestamps also. So if you need to jump around and you just want to get straight to the conclusion, go for it. If you want to, watch the whole thing, if you've got time, it's going to be valuable. We want to see, does the indicators with these lows, which one marries up the best with these lows? And even if we do it a bit more narrow, because we can can help us if I do it this way. This low, I'm going to draw it down like this. This low, sometimes I know people get a bit confused. You may have got a bit confused when I'm looking at indicators. We're looking at this low. A bit more narrow. Around here somewhere. All right, so we've got these lows over here, right? We want to look at the indicator that marries up nicely with this low. And if it does marry up nicely with the low and the momentum, it's basically a momentum indicator. And if it marries up nicely with these lows, we can project forward that the next low is probably going to marry up nicely with the indicator again. So when I bring up the two indicators, they're both a bit choppy in this last phase of the market, right? Like, I mean, look, they're both really choppy, really choppy. So neither of them really marry up nicely with these lows. Whereas previously, these lows and highs are just much cleaner and clearer, right? So it doesn't give us that much valuable information. All it gives us right now is if we look at these numbers on the left, this blue and this red number, when I go to this week's data, we can see that the blue line is above the red line, which says the top indicator is on momentum's on the upside, right? So we should see a weekly low soon, right? That's what it's telling us. This lower momentum indicator, if we look at this blue and this red number, if I just go to this week's data, the blue is just under the red zone, but the red line, but it's below this line, which is 25%. And what that means is it's oversold. So it's saying that the downside movement should be limited and we should see more momentum to the upside in the coming weeks. Right? So this just tells us we should be at or near a weekly low. That's the information that this indicator is giving me. I go, great. Thank you very much, indicator. That was very helpful. Very helpful. So now let's go to the daily chart and do the same thing, right? Now with the daily chart, you'll see that we can see more swings because there's more information in the same time frame. So before every bar, we haven't got bars here, but every section of the chart was a week. Here it's going to be a day. So hence we see a bit more squiggles in between. So we want to see, let's just do this. I want to make this clear for you. Because now we're on a lesser degree or a lower time frame. We actually want to look at these other parts of the market as well. If I can move this across. We're going to look at this low as well. This low is a low that wasn't really picked up on the weekly chart. Is there any other obvious low? Well, this wave 3 is another low. This one here, even though it's not what we're counting as a wave 3, it's still an obvious low that we want to pay attention to. Let's just do it like this. It'll be easier. If I kind of just do this. Pay attention to this one. We're going to pay attention to this one. And it will help us see if there's going to be information on the next one. Even the more recent one, like this low here, is an important one. So what I'm doing right now is just saying which one of the indicators gives us the most valuable piece of information that can allow us to see when the next low is likely to occur based on price, based on pattern, based on now momentum as well. So we're looking at the momentum. So if I double click and we just look at it, like literally just look at it in an objective manner, not trying to just cherry pick for the sake of it. This low, you'll see both of them marry up nicely, but the bottom one is cleaner, right? Because this one picked up this little movement and this movement, whereas this one just picked up this low. So the lower one is winning at the moment, right? On this one, same thing again. It was just quite clean, but if you look at how close to the low, this one was 1 or 2 days after, this one was around 3 or 4 days after, so we want to take that into consideration. This low, again, both of them picked it up almost perfectly, but the top one also picked up these micro movements, which can be a bit noisy. And we don't necessarily want that noise. And then we look at the next one. Again, both of them picked it up. This one picked it up bang on the same day. Like you look at that, it's bang on the same day when the blue crossed the red. It was bang on in line with this. This one on the bottom was around 1 day afterwards, but it's cleaner. You see how it's much smoother, right? And it's less noisy. Whereas this one is catching all these intermediate moves. So if I had to pick between the two, even though this one is bullish right now, and it might pick up the intermediate move, but it might be an intermediate move. There might be an up then a down again, because remember this one catches all these intermediate ones, and this one just tends to catch the bigger moves. So for our purpose, and we're looking to be conservative right now, is we want to just look at the bottom one. And the bottom setting is 13855. So I've got a preset one, which is here, 13555. So now we've just got this one. So what this tells me is we don't want to anticipate the low until both of these lines are below this 25, and when the blue line crosses the red line, when the blue line crosses over. So both of them is, so it's going to be maybe another 1, 2, 3 days of downside movement, right? So we want to take that information into account. That's really, really valuable information. Hopefully that makes sense, right? So the blue line, this is the 25, this line here, the 25%, you want to wait for both of them, like here, to come down and be oversold. And this tells us at this point, the movement of Bitcoin is limited. The downside movement should be limited, and we should be seeing a reversal, especially if it coincides with pattern and price. Here, not so significant, but here, if it does another reversal, which it probably will do in the next few days, that also is valuable information for us. Well, let me just dive back into this chart. Now, hopefully that made sense, right? We can do some other analysis as well in terms of time counts and time zones and Fibonacci price projections. But right now, we've got a macro or intermediate count of 1, 2, 3, 4, 5 of an A. We've got price projections. So this gives us valuable information. We've got probably 2, 3, 4 days of downside movement potentially. So now when we jump back into the 4-hour chart, this is why I was doing that, to say there's a high probability that we've got more downside movement. So if that's the case, we can look at this like the following. I'm just doing some... So what I like to do is the following. Let me just do it live. Is this looks like initial wave 1 and then a wave 2. And what we should anticipate, I'll just turn these off as well, is a minimum of a 1.618 for a wave 3. Right? But this helps me do a wave count of saying this looks like it's going to be the wave 3 low and then a wave 4. So that's helpful for me. So now what I'm seeing on this count is a nice 1, 2, a nice 3. Sorry, did I say here? So what did I say? What did I say? I said here. Oh. Yeah, perfect. So what I'm seeing here is a nice 1. I'll get these clicks right. 1, 2, 3. Sorry, 3, 4. And then we're on this final wave 5, and it looks like a 1, 2, 3, 4, and then a final movement to the downside. A wave, potential wave 5. So here we'll have a wave 5 of a 5 of a C, sorry, of an A of a 4. So if I can bring up those notes again, I don't know if they should be on this chart as well, but they might be hidden. So if I just go back to the daily chart and find those notes that we made earlier, that we here somewhere. Here we go, these notes here. Right, let's just bring them over here. Now what we're going to do is sub-micro. What do I mean by sub-micro? Which is the next level down, right? And we're saying we look like we might be on the wave 5 of the wave 5 of the wave A of the wave 4. So this just tells us there's 4 degrees of counts now. There's a wave 5 of a 5 of an A or a 4. Right? We got the macro, the intermediate, the micro, and now the sub-micro. And don't need to go too much lower than this, because this gives us valuable information. So now if we just jump back into because this is what I want to finish up with. And hopefully you found this valuable, because I'm taking my time deliberately, because sometimes, people just want the end answer. Like, what's the price projection? But sometimes it's good to know the method to the madness, right? So if we're doing a price projection, it's like, what's the thinking behind it? We want to do the thinking behind what we're trying to achieve here. But we could be looking at, if you like today's video, like, subscribe, hit the bell notification, help me get to 1,000 subscribers, share this video. That's what I want you to do for me today. Just share the video, because it's important. 1, 2, 3, 4. So let's just do some price projections for an end of a wave 5. I want to do one more thing. Let me just do one more thing, because Bitcoin recently have actually it's been overextending. So a typical wave 3 is actually between this zone and this zone. And I just want to look at it one more time, just a bit more objective. Just give me a second. Because look, with Elliott Wave, you have to make decisions, right? Right now, what decision am I trying to make is it likely that this is the wave 3 low or this is the wave 3 low? And actually it makes a difference. And looking at the recent movements of Bitcoin, and this even count, 1, 2, 3, 4, 5, is more likely, just looking at it again, that this is the wave 3 and this is the wave 4, right? Why? Well, the momentum on the daily chart suggests that we're going to have 2 or 3 days of downside movement. Also, Bitcoin recently has been doing more 2.618 as opposed to 1.618 for wave 3s. And also this wave 3 kind of breaks down to 1, 2, 3, 4, 5. Yeah, and then this is a more obvious correction, more similar to this wave 2. So just taking those pieces of information into account, actually this is more high probability that this is a wave 3 and a wave 4. And that's important because it's going to say that this is the initial wave 1 of this final leg of this wave 3. So let's just do some price projections on this sub-micro account. We won't go any lesser degree than this, but this is going to give us valuable information because then we can see the sub-micro, which one of those coincides with the micro, which one of those coincides with the intermediate, right? And when we have a confluence of 2 degrees and even 3 degrees of cluster of price projections, that's when it becomes really high probability as a potential new support zone where price will reverse. Because when time, price, pattern, and momentum coincide, a reversal is inevitable. And we can kind of project what's likely to occur. Never guaranteed, as you now know, but just we're looking at probability. So now let's just finish up with this. Oh, by the way, thank you for sticking with me on this. This has been a long one. This has been a detailed one. But I think it's, the timing of Bitcoin right now, what's happening right now, I think it's needed because most people are just going to kind of go with fundamentals. They're going to go with the China FUD. They're going to go with whatever news is coming out, but they're not taking the real psychology of the market into account. So rather than just panicking, FUD, fear, uncertainty, and doubt, we can kind of make more logical decisions based on more factual information, high probability information. So now let's just do a typical end of wave 5. Again, is 62%, which is 0.618, and the maximum tends to be 100%. Right, so now we've got 2 clusters, the 2 cluster zones. But because we're expecting downward movement for a few days, it's likely it's going to be the 100%. So I'm going to go more with this one, and there's an extra cluster there. Then we can also, in fact, I think that's just going to be the main one, because we want to take this into account. We'll take this into account. Wave 1 and wave 5 have to have a nice relationship. And the typical relationship is wave is typically 100% and a maximum of 162%. So actually we've reached this zone here. So this indicates we could be at an end, but I wouldn't make any trading decisions until I see that daily reversal that we spoke about earlier. And then the momentum on this chart also suggests we might be at an end as well. So this is what the analysis is, right? We've got 2 zones. We got this zone here as one zone. Let me just get rid of this magnet. We got this zone here. We could be at a wave 5 over 5 of an A over 4, and we're just going to project it forward here. And if it doesn't hold and it goes past this, then the next zone is this zone here. We do have lower zones as well, but it's likely going to be one of these 2 zones as high probability going by the 5 wave counts. But again, we just have to let the market unfold and let it do what it's going to do. But again, I wouldn't look to make any hasty trading decisions on the long side until we see this make a bullish reversal, because look, it coincides with these lows very, very nicely. So we could expect maybe, let's just say, have a look, 1, 2, around 2 days of sideways to down movements, which is why I would actually, if I had to pick, which one's more likely, I would go higher probability, just price counts is here, but because of the momentum and the way Bitcoin is right now, and the fact that we're at close to this previous wave 3 and wave 5 tend to typically extend beyond that wave 3, I would say it's likely going to get into this zone here, which is around the 28,000 zone. So we just want to be really, really aware of that. So there you have it. You have a 4 degrees of counts. 4 degrees of count, that was high level. I don't know if you've ever seen that before. And if you have, sorry, if you haven't, please like and subscribe and hit the bell notification, but share this video. Help me get to 1,000 subscribers. So the summary, let's do a quick summary, because in the timestamps we'll do a summary, right? The conclusion. If you jump straight to the end, that's okay. And the conclusion is the following. Let's just quickly zoom out. Zoom out, zoom out, zoom out, zoom out. So what we covered today is what we said is the following. We said, right, the macro picture for Bitcoin is we're on a wave 4. Looks like we're on a wave 4. What do we mean by that? Right, well, this is a wave 4, right? And we're not at the end of that wave 4, we're just on a wave 4. What part of the wave 4 are we on with Bitcoin? Well, we're on the, looks like to be in a wave A of a wave 4, right? So what we mean by that is this initial move down is what we're counting as a wave A of a wave 4, right? And it normally typically has 3 legs of an ABC, and it looks like a first leg of an A. What part of the A are we on Bitcoin? What part of the A? Well, we're saying we're on a wave 5 of a wave A of a wave 4. And what that means is it looks like we're towards the end of this wave A, which is a wave 5 of a wave A. So we should see the end coming soon. What do we see on a sub-micro account where it's a wave 5 of the wave 5 of the wave A of the wave 4? So we jumped into a 4-hour chart and we said, right, this wave 5 is actually also breaking down into 5 waves, and we seem to be on the latter part of the 1, 2, 3, 4, 5 of the 5 of the wave A of this wave 4. And now we have a price cluster zone. And now when we zoom in, keeping the notes on the chart itself, when we zoom in right down here, we can see this zone here. So what I want to do lastly is to say, right, if and when and if we do get this reversal, which tends to come at some point, we're saying some point soon, we then should see upside movement to a wave B. And then just to summarize on this, because this is important, is a wave B, typically, let's just say we end up correcting at 28,000, right? Let's just say the wave A finishes at 28,000. A wave B typically is a minimum of 50% and a maximum of 78.6% retracement of a wave A. So that would mean that the price zone for a wave B would be 46,000 to 56,000. And even though it may not hit our all-time new highs and we may have a last leg down, overall, most people are not going to know this information, right? What we're talking about. Even the market going above this point here brings confidence. And during this phase, we should see a lot of confidence come to everything. And then we want to be very aware of this zone if we do get to this zone and if it unfolds. And we'll do an update at closer to the time, because that's when we want to be making sure that we're taking profits before another big pullback. And then be aware if the market does come down here, what's likely to occur next. So if you like today's video, hit the like button, subscribe, hit the bell notification. I got a special quote from you for you today. It's from the book, one of my all-time favorite classics, The Richest Man in Babylon. It's an old school book. It says on the top, the success secrets of the ancients, the most inspiring book of the unwealth ever written. And there's a nice little quote. It's an old school book, but I love this quote. Men and women of action are favored by the goddess of good luck. Men and women of action are favored by the goddess of good luck. Keep taking action, keep learning, keep those strong hands, and apply high probability. I will see you soon. Share this video, help me get to 1,000 subscribers. See you soon.